And then a few years later, I thought, hey, I'm going to sell that. So no.
GameStop, what it reveals about the US stock market. In 2020, the stock of GameStop, a struggling video game retailer, was only worth a few bucks. They reached a high of almost $450 on January 28, 2021. A Reddit named Wall Street's Bets is thought to be to blame for the craze. It has millions of members who bought shares in GameStops in what was billed as a war between Wall Street and vigilante days traders who sought to get back at an established investors, sending shockwaves through the Wall Street and even prompting anxiety at the US Treasury. Trading of GameStop shares was finally restricted on some trading platforms. Hello and welcome back to our channel. So, without wasting any time, let's get started. What does this reveal about the stock market in the United States? Why were customers unable to purchase GameStop stocks using trading platforms such as Robinhood? The decisions by Robinhood to restrict trading of GameStop shares has sparked a lot of debate. As a result, it's worthwhile to investigate why that decision was made. At the moment, it seemed that they were unable to cope with the huge volume of traffic and interest in GameStop shares that users of Robinhood had. According to some estimates, 50% of all Robinhood consumers had some exposures to this stock. These pressures could have influenced Robinhood's choice to stop trading. But the wider picture is that, while this one retail stockbroker made the decisions to stop dealing top shares in games, it did so because it was uniquely positioned and exposed to the dynamics. With the exceptions of few others, most other retail brokerages were able to keep trading GameStop shares open because they weren't as exposed to the dynamics as Robinhood was. Now, what is short selling? Short selling is when an investor bets against a stock by borrowing it, selling it, and then trying to buy it back for a cheaper price in order to return the stock to its original owner. If the price drops in the meanwhile, they pocket the difference. So basically, a common approach for investors to bet on a stock falling in value. Then, what is a short squeeze? A short squeeze occurs when the person who shorted the stock, that is, the person who borrowed and then sold it, finds it difficult to pay it back. It's challenging because the stock has become significantly more expensive in the interim. As a result, they are squeezed. And if you're a short seller, you have a legal obligations to return the stock you borrowed. You must essentially go to the market and purchase it regardless of how high the price has risen. The only other options for you is to break your contract or declare bankruptcy. A short squeeze occurs when a larger number of people have shorted a company and then the stock's price rises dramatically, making it difficult for the shorts to exit their positions. In the instance of GameStop, this is exactly what happened. Has GameStop demonstrated that there are two sets of rules for Wall Street and ordinary people? Yes, unavoidably. The hedge funds that operates on Wall Street every day and the vast sums of money to invest, as well as the greatest software, platforms, connections, and terminals. As a home-based retail investor, you'll never be able to compete with that. As a result, it's unavoidable. There will be some asymmetry there. The more contentious aspect of that argument is whether authorities or the systems are working against regular investors. Regulators are more likely to be paternalistic towards individual investors than they are towards hedge funds. Unless there is a systemic threat to the system, regulators aren't concerned about the hedge funds losing money. Previously, authorities have placed a high value on the assumptions that ordinary investors understand what they're doing when they enter the market. Of course, many people in the current circumstances are buying GameStop stock and claiming to know exactly what they are doing. And this is all a deception to make us believe we don't, in order to keep us out of the market we are transforming. It's worth noting, in the context of how much access retail investors now have compared to what they had previously, there is a significant amount of direct access. The fact that it is now frictionless, whereas previously there were expenses associated with trades, how much information is available on the internet and can be shared among ordinary investors. This is perhaps the most equal relationship between Wall Street and the general public that has ever existed. It's important to not lose sight of the fact that, in contrast of the past, we are currently experiencing a moment of unprecedented access to average investors. Short selling in the market in general is something that helps with price discovery. It aids in the functioning of the market and the determinations of appropriate prices. Wasn't it always the case that shorting a stock came with the risk of becoming an internet meme and having a swarm of people swoop in and buy the stock to create a short squeeze? You might think that's bad for the markets and price discovery in general. The events that happened at GameStop are so unusual. It's doubtful that this would happen again because the short positions were so huge in comparison to the trading liquidity. However, it's fascinating that many people are saying on the internet that these short sellers are horrible actors for selling the stock short, especially during a slump like the one we are experiencing. Now, the question comes, what has been the response of the authorities? Is it necessary to govern the situation? Some politicians and others across the political spectrum believe it was illegal for Robinhood to hold the trading in the manner that he did. Based on the current terms of service and law, the argument will be extremely difficult to win. There's also been debate about whether ordinary investors should have the same level of access to and ability to trade all of the highly leveraged derivatives that institutional investors do. That is a dispute, a Wall Street turtle that is perpetual with market regulators. What does GameStop have to say about the state of the stock market in the United States? Is it sweltering? There is a sense that what's going on with GameStop is one-off occurrence, and it is fairly minor in comparison to the overall market. However, you may short squeeze with option trading, which has these momentum effects and can drive a stock up quite high. Although there have been more spillover consequences, the GameStop example is one-off occurrence. Of course, some argue, why don't you look at what's going on here, which is a lot of ordinary investors betting on the stock market from their homes, which tells you something about the kind of economic scenario we're in? Easy money, in our opinion, is a reaction to the economic situations, and rising asset prices are a logical outcome. Isn't it necessary to be a bubble for this to be true? However, without the amount of liquidity in the currency, in the economy, and the amount of money in the people's bank account as a result of the stimulus measures in reactions to the pandemic, this could not have happened a year ago. So, if you've been arguing that the stock market is a big bubble, here is yet more arrow in your quiver. Because you can say, look, hasn't it always been the case in history that stock market bubbles are followed by these wild pockets of enthusiasm? And isn't that exactly what we're seeing here? However, what we're really seeing here is a new phenomenon involving the internet banding together against the establishment and using financial markets to do so, something we haven't seen before. There will be a lot of digging into that point to see how much of it was driven by retail excitement and how much was driven by other reasons, such as derivatives trading and the short squeeze, or huge institutions piling in right now. All regular investors are opposed to hedge funds. However, it's possible that the large number of hedge funds were on the same side as ordinary investors all along, and that they are a major driver of that stock as well. Is it possible that GameStop has begun a trend? Will it happen to the stock of other companies? We might expect something similar to happen to the stock of other corporations. In this regard, widespread retail access to financial markets is unavoidable. Reddit isn't going anywhere. The social media dynamics aren't going away anytime soon. The slightly populist dynamics of the current situations will persist for some time. They are a reflection of the current state of society. In terms of short interest and limited trading in the underlying shares, GameStop is a unique situation for this to happen. It would be astonishing if something as spectacular as this occurred again. These retail traders, on the other hand, will continue to be a force in the markets. So that's it for today's video. If you liked the video, do subscribe to our channel and press that bell icon for more regular updates. Also share this video as much as possible. Till then, bye bye.